Bitcoin is still out in the cold. Should your portfolio start looking for hotter opportunities? This is Inside ETFs and we're talking about Bitcoin. It's been over 8 months since the 2025 flash crash. Since then, Bitcoin's recovery has lost momentum, with the cryptocurrency struggling to reclaim its previous highs. At the same time, some of its biggest advocates appear to reassessing their position. Even Michael Saylor has trimmed a slice of its stack, who famously said, "Sell a kidney if you must, but keep the Bitcoin." So if conviction at the top is changing, should your portfolio? Well, let's ask Cynthia Murphy, investment strategist at TMX Verify. So Cynthia, US-listed spot Bitcoin ETFs have reportedly seen significant outflows in recent weeks. What's driving investors to pull money from those funds? And what would need to change for flows to turn positive again?
What's interesting is that there's a lot of factors driving that. One is just a general concern about risk assets as we talk about geopolitical risk, as we talk about inflation, big concerns about the macro conditions of the economy, both in the US and globally. Also, just the appetite for artificial intelligence, AI infrastructure, space, all these other risky areas of the market have kind of sucked the air out of the room, and a lot of capital has flown into those themes at the cost of crypto assets a little bit. And then there's a concern here about interest rates, which we seem now to be on a path where the market is pricing to it. So, Bank of America just came out and said maybe 3 rate hikes this year. That makes the opportunity cost of holding Bitcoin, which is a non-yielding asset, much higher. So it's been a confluence of factors weighing on crypto, and the outflows have been there. To your point, though, what's interesting is a lot of the outflows have been on the what we call the more speculative, more retail, the ETF space, not so much on the big banking institutional space, where we're still seeing some movement there and buying the dips, building out that position with a very, very long-term perspective. So there's two kind of trends within the space right now.
Well, let's talk price now. Bitcoin briefly dipped below $60,000 earlier this month before rebounding, but is still trading well below its highs. Do you think it's found a floor, or are investors underestimating the risk of another leg lower?
You have folks projecting that the estimates I'm seeing from the big crypto experts is that 65 to 90 as the sweet spot, the range we should be navigating on. I mean, there's a lot of technical pressure here. So folks that are really triggered by 200-day moving averages, 50-day moving averages, all those levels Bitcoin has been testing and kind of failing to hold on to. So there's technical pressure. But the hope is that if you even from flows alone, if flows are any indicator of sentiment, we have seen a moderation on the outflows, and they have started to really slow down significantly in the ETF space. So maybe that means there is a floor there coming up. And then there's other parts of the Bitcoin market in the ETF space that have actually been gathering assets, like the income generating Bitcoin ETFs, like BTCI, for example, is the biggest income gatherer this year, which is generating income on a non-yielding asset like Bitcoin. So those types of plays are still finding a lot of success.
Let's delve deeper into those strategies. Investors still appear to be sticking to the basics, though. Are these new products addressing a genuine demand or searching for one?
Yeah, so BTCI, which is a product from Neos, was kind of a pioneer in this category, which is basically it has that exposure to the underlying spot price, but it writes options on it to capitalize, create premium on the volatility associated with Bitcoin. So it's paying out distributions anywhere from 25 to 40% on a monthly basis. What these strategies basically do is you give up a little bit of that upside on the price of Bitcoin, but you're generating that monthly income on a yield that doesn't generate income. And it's kind of a defensive position a little bit, and it's a position that if Bitcoin is not really going anywhere, it's not really going higher, it's just trading sideways, it's a good opportunity for investors to stay invested and pick up that monthly check.
jpmorgan, though, estimates that Bitcoin's production cost is now close to the market price for many miners. That leaves a significant portion of the industry under pressure. So what does that mean for mining companies ahead?
Challenging. It's we could start seeing some consolidation, but we could also see, we've all often associated that mining cost as kind of a floor for pricing. So it could be that we are kind of there, and that might be the catalyst we've been looking for some recovery here and some upside. We'll have to see.
So finally, Cynthia, some analysts argue that Bitcoin's muted performance is actually a sign of maturity, behaving less like a speculative trade, more like an established class. So do you agree, and what does that mean for its long-term case?
Bitcoin is to me is still young, but it's also mature. It's an interesting asset class where different folks are using for different reasons. Some folks are using as a risk asset. Some folks use as that digital gold. It really depends. I will tell you this, on surveys we do here at Verify, you'll be amazed to hear that a recent one we just did on digital assets, 45% of advisors said they haven't invested yet in Bitcoin. So if you think about the opportunity in the advisory space alone in the US, it tells you that it's still early days. We might be comfortable with it. The asset may be maturing, but as an investment asset class in portfolios at the advisory channel, it's still really young. So we could still have a lot more runway here for sure.
That was Cynthia Murphy from TMX Verify. Don't forget you can watch more videos on Reuters.com.